Good afternoon. Welcome to OptionsTender. It's a weekend edition. Volatility mayhem. Insane movements in volatility in the market. Is this a crash? Well, I would describe this as a crash. And where does this end? So we're going to look at different styles of crashes and how they end. They typically have large moves, whether it's V-shaped or large consolidations before reversing. And then we'll look at a couple situations where are we actually going much, much lower, or are we going to make new highs before continuing with this move lower? All right, I know that sounds crazy, but I'm going to show you a chart that blows your mind. All right, and with high volatility, options premiums are insane. So we're going to take a look at spreads, in-out spreads to be specific. In the Discord, we'll certainly show you some, we'll share with you some of the in-out spreads when we think we're getting to a bottom zone that we can use that are very safe and cheap to play. All right, and then I introduced a new, it's not new to my programs, but on the weekly edition, we're going to show the volume profile, because volume, and I have a video for that if you want to check that out, how you can look for a spot that would be good for reversals. And those would technically, I think most people use volume shelves as the, or nodes as the term that is most common. Okay, so all this and more, let's check it out. If you're new here, go down to that bottom right-hand corner, hit that OptionsTender logo and subscribe. We took a weekend to clear our minds of this crash. We knew a crash was coming, okay? So I'm just taking a second. I was looking for a crash, okay? But I thought it was going to be more structured, like 2007 or even 2008 or 2000 or 2007. Okay, but we're looking in a situation where, hey, we had a 44% move here, 1929, had a significant bounce and continued to crash lower. Okay, so is that one of the possibilities? Sure, absolutely. And then when we look through this, we had the Corona crash. It was a V-shaped recovery. It just straight back up on the monthly time frame until you got to the highs where you had a little consolidation and continued higher. Is that the situation? I'm not so sure about that, but we have to keep that in mind. We had an expanding structure there. When we had 2008, when we had the crash at the end of it, again, V-shaped reversal. It took a long time to recover from that situation. So that's kind of the thing that we're keying in here. Just a devastating move here. All right. And so it's very difficult to play these type of strategies unless you're in the right direction from the get-go. Okay. So always protect your positions. All right, so on the monthly time frame, let's go ahead and look at some of the indicators we have here. We have the moving averages. We're coming into the 20 and breaking down from it at this point. And it looks like the 50 is all the way down at the 46.50 area. All right, things can go awry. Okay, price can still get down to that point. It is possible. Looking at the DMARC, so we're at a 1-2. We'll see what happens as we go. OptionsTender setup. All right, so the MACD, here is a significant look. All right, we don't have a close of this monthly candle yet, but we do have a crossover. We finally had our bear cross here, and it happened abruptly. So we're going to put a little red dot here. And I'm going through this pretty thorough with you. Okay, I didn't update all this on my own. So go ahead and play this at 1.25 or 1.5 speed so you can get all this information. There's a lot here, and I want to make sure that you get all of it. Okay, we're in oversold territory already. Okay, it's 25 on the RSI. We're in the 25 area, so it could go deeper before a significant bounce. And we'll have to watch that, and then we could also find a positive divergence at some time. So we'll see how that works out. But we're getting into the point where if you're short, you have to be a little bit cautious. Okay, haven't cycled through already. On the slow stoke, heading lower, momentum's to the downside. Now the McClellan Summation Index. We'll look at that in the daily time frame. I don't want to get into it on the monthly. Okay, so let's go over to SPY. And then I want to take a look at the volume profile. So you can't do that at SPX if you don't have the volume. All right, so here's a volume node here that's a much larger. Do we get to this area here? I don't know. If we have some sort of crash, absolutely, we can make it down to that area. That's a massive, massive move over time, and that would take years to play out. But anyway, so that's this is the definition of a volume node, a visual of it. So looking at this here on the monthly time frame, you can see that there's a little bit of gap, and we're just about at it now. And so let me dig in a little closer. You can see that gap here. And so the actual small shelf where you might get some sort of bounce or so is 485. All right, just around that area. And that just so happens to be with the top here, the former all-time high. Now, where we have consolidation and the real volume shelf, and this is where that 50-month moving average was sitting at. Okay, here's the shelf that price still could make it to that point if it's still in free fall. We may get small bounces, but I don't anticipate that, and we'll look at that on the lower time frames and show you some of the other crashes that have happened. This is 460 volume shelf here. Now let's go down to the weekly. If you guys want to get a visual, I think this was going to be too long of a video if I go through all the indices. Let me just go through the entire video here, and then we can see if that's something we want to do with time-wise. And comment and let me know if you want to see all of those indices in more detail, or if you want to see indicators. I know that I got some responses that said the time doesn't really matter when they pay attention to the video. So, okay, so we have some support and resistance coming in here at about 495. All right. This is not a real good trend line for us because there's only 2 touches on it. So keep that in mind. What's going to be more important is the horizontal supports and resistances. And then you have 470. And then you have that volume shelf. And also, if you see this equilibrium, it's a triangle here, formation or equilibrium. And that's where I think if price makes it down this low, that 550, 560, I know I said 560, that's where it starts, it's a zone, then that's the most likely place where that would stop. I know that's so far down there. And then again, on the lower time frames, we're going to go to the daily, and I'll show you that this two scenarios on this that might form a structure that could make it down here, or it should end pretty soon. And we'll look at that. Here's the moving averages. We're at the 100 moving average, so we'll see where price opens and what happens after this. My guess is that we might hit this. Again, it's just a guess. Nobody knows. We have 495. It's so close here. I think we might hit this, form some sort of wave 4 on the daily time frame or intraday. I don't know, But we may get some sort of bounce here, and that's a good point. Is the last video on Friday, I had comments on where's your bounce and things like that. If you guys were watching when I was making the video, the price bounced over 100 points intraday. We got our bounce. All right, maybe we need to just do videos on the 5 minute, and then you'll be like, holy cow, there's our bounce. No, I get it, intraday. And then if the members, if you want me to do a updated video after, then please consider commenting. Let me know in the Discord if you want me to do those videos after the intraday when the market closes. Okay, so after 495, maybe we get some sort of little bounce intraday, or we consolidate for a couple days. That typically doesn't happen in a crash like that. And then the 470 area is where the 200-week moving average, which has held this whole run, is there as well. And you can see it. This still on the monthly time frame has, if you looked at the monthly candles, just has a wick through there. All right, there's price action, just a V shape through there. So this is still good. This still means it held. It just broke down to reach whatever level it needed to, and didn't quite get to that volume node there, but almost traded to that point. So it could break down all the way to this point, and I think that's a likely situation. 470 does not seem out of crazy, Sorry, I'm looking. And maybe it spikes through really fast in a crash situation. You can get that spike through there down to our point. So just, if you're holding puts, if you're holding puts, great, but when you start to get into these levels, just, hold on tight and take profit maybe, or hedge, do whatever you need to do. And let's go ahead with, let's do DMARC. All right, we're in a 7 count. So we'll look on the weekly time frame. So we'll keep on this weekly time frame a possible setup for a 9 count going into supports to look for a setup here on the DMARC. Here's our options tender. So the MACD, massive move to the downside. Momentum is clearly heading lower. We're into the bear territory. This is typically where you get a bounce in this scenario. It looks like it could keep going. And just like this, eventually you'll see some sort of bottom somewhere, and no indication of any positive divergence or anything like that. You just get a V-shape bottom. Now, what I will say is you have a 13. I think the lowest point was 12. There you go, 7. Okay, 7 on the RSI. And so if we pull up RSI here, we can definitely go further. We're at 17.95. No, we're at 7. We're at 7.26 at this point. So we're right there at, kind of comparing to the Corona crash. We're right there. Doesn't mean that next week we couldn't go further. Again, I do think we're going to go further. This is a crash situation. And so 7 could go to 5. Whatever the scenario is, it can happen quick. And maybe it doesn't reach down any further at all because we have some sort of huge reversal candle. Maybe in the beginning of the week, all the way till, I don't know, Thursday. We're looking for a low, though. And we're looking for a low starting at the end of the week going into next week. And so maybe we get some sort of huge wick type candle and all of this mess, and that's it. We're just getting to the oversold territory, and it's so extreme. It's just not a good place to have puts anymore. I wish I was in puts to get to that spot and be in that position, but I'm not. So I'm not going to add any now. And then we'll go to a volume profile on the weekly. And here's our shelf. So All right, so we were just at one at 500. All right, you had that was breaking down from that area there, and about 500, and we're getting below that, and we don't have any sign of a reversal to the upside, and so we're looking at that next shelf starting at about 474, and that just lines up perfectly with our support and resistance. All right, and that volume shelf again goes down here, so I don't need to pull this back out. You can just see this is a good zone right here for a weekly time frame reversal, and price can certainly spike below it, but we'll keep this. We'll put a green spot here just for our reference for next week or so, or next week for sure when we look at that, but I might have to do a intra-week update on the higher time frames. All right. Look for this to stop. I just don't know what kind of look on the weekly time frame. We'll probably just have one or two more bars left going into all this mess here, going to these lower positions. And visually you can see after this breakout here, things were just straight up. There's not a whole lot of trade here. This is where I suspected that price got to in the past, but I didn't think it would get here so fast. I thought there would be more structure. I was looking for let's see if I have a weekly count on this. Yes. So anyway, we were talking about 3s and 4s and such in earlier videos. And so I'm getting off track here. So I don't want to jump into the count yet. Okay, but I do want to look at time and price, and coming into next week, Friday starts our time and price relationship. So just this massive cluster here. I don't know how this is going to resolve, but price is certainly biased to be on the downside coming into this cluster here. And I think we get a nice reversal off of it. The thing is, if I look at this, what I want to show you guys was, I'll pull in this reversal here. You can have this V shape. Price just, it's extremely volatile inside the week. Ends as a bar, no reversal bar. Maybe you can call it a inverse hammer. Price started lower from that point and got just a massive bull reversal here. That was from 218 to 260. My gosh, that is a 16% move in 1 week. So, just like price actions happening right now, 16% move all the way up there. Got a pause in the week, and then another large candle continuing to rally. So you can see you got the V shape there, V shape here, and then with other crashes, you can see, and there's past ones, but I'm gonna speed through this a little bit more. After a large move, you can have a consolidation area. A consolidation where the moves are large and you have volatility, and you have a consolidation and then your continuation higher. Okay, so those are the situations we're looking at there. Let's move to the daily. All right, so we were looking for a bounce here. We got the bounce. It didn't happen like a wave 4 or anything like that. I was looking for a possible. Now we can start about wave counts. A possible structure here and a continuation lower. So we said bounce and then coming into a low this week. Now what I meant by that is Friday. If you the end of the week, we're looking. It's not exact. We're looking at some sort of bottom starting off Friday, perhaps this whole thing is done, or we go just a little bit lower. But let this play out. Let this play out. We have support coming here at 477 again, 490, 477, and then you have a lot of stuff happening right in this zone where we're talking about. This is actually the full zone here, 470, all the way down to, let's call it 460. That's the standard deviation from this volume. Clearly price went off the hinges, and this was a blow off top here. So possibly just coming back to that standard deviation. So you have 460. All right, so this is the zone that we're looking for some sort of bounce. And now what I mean bounce is a tradable swing, not a situation where it's just a couple days. All right, so we'll be looking for this. And it doesn't have to make it all the way down here. Clearly, right? Okay, let's look at some of these indicators real quick. Okay, moving averages, just clearly down here. And again, I sent out a short and showed the Discord. This is where I went long. This is where I was suspecting. And then I was looking for another call position here. And a heated warning on the short to, if you're bearish, hedge your positions. And I also gave a wave count here to the downside. And what I didn't do, I didn't emphasize in each and every video or to myself that we have to get over this 8 EMA and the 20 moving average, okay? Momentum is down. Daily trend is down. All right. And I don't think I put on those moving averages. Yeah, I did. And I thought with the structure that we'd get a kiss of death up to the 20-week moving average. Didn't even come close. And so when all this is said and done, that's what we're going to have to look out for. When this move is done, and I think we can start to see on the daily time frame structure. Okay? Here's a 1, 2, 3, and maybe intraday, I don't know, wave 4, maybe it takes time, maybe it doesn't, maybe it's just one day. Get some sort of wave 4 in here, and then you have a 5 that completes things, and that 5 could bring us into the zone here. I think that is kind of the scenario we're looking at. So you can count this in different ways. And here's where we go into the other. Let's see here. Before I jump into a wave count, let's get the rest of these over with here. Here's a DMARC. I know I'm kind of all over the place here. Okay, we have a 6 and a 9. So we had the 9 count here, gave us a bounce. We're looking for another 9 count or 13. So you might get a 9, 9, 13 exhaustion sell signal. And that would be a good point to, again, look to see where we are with price and time and match that up if we do get those counts in for a good long play. So we're not gonna go long on Monday. Probably not even until the rest of the week. And then, again, I'll show you those in-out spreads. I'm not going to show you here in this video. I just want to mention it. But the video that I posted above is the in-out spread tutorial. Okay, it's very simple. It's a cost-effective for small accounts or any account. You can put on as many contracts as you want to. But what it does is it mitigates risk, gives you time. And as volume is so high, your options premiums, now they can be affordable. Now you can mitigate your risk. And that's the important part about it. And this is a strategy you can use for all time. And I'm going to play these a lot more in our Discord. And this is a proven strategy. I got it from Theo Trade. This isn't something that I created. But I really, really highly suggest you can walk away from these. You set your sell, and you walk away and you set it and forget it. And this is just a fantastic strategy to use. And so we'll look for lower prices and just extreme situations, maybe possibly positive divergence going into some of those. And I want to pull out this daily. I know I'm bouncing around, you guys. There's so much I want to show you. And I want to show you some of these crashes. All right. So just a mini crash here. V shape. I mean, just days and days in a row. After the Corona crash, okay, this is a good example. Okay, so we on the monthly and the weekly, you can't see any structure in there. You see wicks all over the place. Insane movement, okay? But we do see a little bit of structure in here. That could be your A, B, and then you get 1, 2, 3, 4, and 5. I'm just, and look how that 4 possibly was a triangle before the breakdown there. So you have that inside candle and it broke down. So you do actually have a little bit of structure in there. And so I can imagine that at this point, we start to see a little structure somewhere in here before our final bottom. Okay, so maybe our bounce is on Friday. Maybe it's sooner, I don't know. But then we're looking for our final move down to probably into the week after. Maybe Friday starts that final descent, and you have a crash into Monday or Tuesday, turnaround Tuesday in the following week. Okay, so next week, choppiness, big moves, choppy. And then maybe Monday, follow through to the downside and turn around Tuesday, looking for some sort of low. And then after that low, that's what we're going to talk about in a few minutes. Where's another crash? 2018. That was the Powell the tantrum. I can't remember what we used to call it, but price just ripped to the downside during Christmas, and I remember that did so well on both of these, and totally face planted on this one that just occurred. So again, V shape after. Look, there's no. So in this one, here's another example. In 2018, you see a little bit of structure here. So you have your A, B, and then it looks like, maybe 1, 2, 3, and you just don't really even see a 4 in there, and it was done. So maybe that's how it plays out. You don't see anything, and then it reverses. You get a massive green candle, and the next day it gapped down, so people were scared, but it was actually a buying opportunity. It just, you just don't know how it's going to end, but it should be an event. All right. And maybe it's off of some sort of news that we can say, hey, this is, tariffs talks have come through, or tax breaks to everybody. And, so here's 2008. All right. Going into 2009 bottom. Still having your big moves to the downside. In this one, it kind of petered out. You had your structure here, 5 wave last move here. Maybe that was a triangle or so. And then 1, 2, 3, 4. It's just such a clean move down here. And you get a couple days of consolidation, scariness. And then they're big moves, but nothing massive. It's almost like nobody was trading anymore. But the move was pretty much straight up. But if you're looking day to day and intraday, you're like, hey, it's just up, consolidate, up and down, up and down, up. So it's kind of grinding to the upside, even though if you put this on the weekly, it looks like it's straight up. So, looking on the intraday is tough sometimes. Daily is fine. If you're intraday and you're on the 65, this is probably really tough price action. All right, so it just look at the bigger picture when volatility is so high. Oh, that was a nice little crash there. Crash here. I don't remember that. 2010. Yeah, I don't really remember this. I wasn't trading options or even charting at this time. But yeah, this massive move to the downside, a crash, almost 20% or so, and a gap up. Is that the next day? Look at this huge gap up after that. Oh, okay, I see now. You had that wick. So massive move from intraday, probably a 10% move. Consolidation, continued move, and then a drop back to the lows. Just huge. Wow. So anyways, that's what crashes look like. They're just insane moves and up and down because volatility is so high. When you're getting a volatility crush, volatility is still technically high. And so when you move up, it's just going to be massive moves. That brings up 2008. And it looked like there was just no sellers or anything. Well, volatility was already down. Volatility was actually falling in the rest of the crash there, and it gave a signal of things are going to turn around. But that's most likely why that situation looked different. All right, I know we're spending a lot of time here. It's a McClellan summation. Let's do we're at the DMARC. All right, we're just watching this fall. So we're watching the MACD, and we had a crossover, and this is what gave us a new low here. I do think we might see something eventually. I don't know if, on some of these crashes here, we didn't have any positive divergence. No positive divergence. We're just, at extreme points where you got your crossover there to the upside before you can confirm. All right, new lows on both of them, so no positive divergence, just getting into this oversold territory. Right now we're at 10.87 on, so that could still go a little bit lower on the RSI, and maybe we'll see something here first. Again, I like to go to some of these examples. On the RSI, we did get positive divergence here on the Corona crash. 2018, we did not. We just got way oversold. We went down to a 5 handle, 3.5 handle. All right. And then the slow stoke is still cycling down at this point. So we should see some new lows coming up here in the beginning of the week. And maybe turnaround Tuesday gives us our bounce and we continue to go lower into Friday and Monday. Here's the summation index, and I'll leave that. I like it. Sorry, I'm bouncing around, but I don't want to show that yet. I want to show that on SPX because I have it marked up where it's bullish and bearish, and you can see things much better from a visual aspect. All right, here's SPY volume node. This is looking really wacky here. We have too much information in there. Okay, here we go. All right, look at that. That fits nicely. All right, so we're building up, we had volume here. We're breaking down from it. And again, price could bounce here back and forth in a small manner, maybe 3 days or so, and come down into these lows. That's where you have this daily, again, volume node here, and a much larger one at the end of this move. So even if things just dumped in between these points here, you have your extreme, you have your VPOC right at this point. Now I know that there's another one here that was former, and so I'm going to draw another one. I'm going to just duplicate this just in case we make it down to this price. And that's, I think at that point, that will show such extreme readings and positive divergences. I can't help but buy that situation. But I think that with the possibility of a V-shaped reversal, that the in-out spreads, this will be a good point at 470, about 475. I think that's a good point to start scaling into those in-out spreads, and we'll look at some individual names that probably will be bottoming before the market does. So likely to be like Tesla, Nvidia. They'll probably start bouncing, and in these situations we get a lower low in the market, but we'll get a higher low in some of those individual names. All right, let's look at some of the structure now. We did time and price. We know we're on the weekly, we're coming into time and price into the end of the week, not even until Friday. So expectations aren't until Friday. And I didn't want to show this chart yet. So our time and price here is we're coming into the 10th and 11th. So again, looking at the end of the week, we have a time and price situation. Now, these retracements are not even valid. There's nothing to even try to retrace yet. And I think I have two different... Okay, so here's our ending diagonal situation, right? So this is what we've been working off of. You know, we got a little bounce in this cluster here. So good 50% retracement. Usually you see at 50% retracement some sort of reaction. We got it, okay, again, but that it didn't hold. We got up to the top of here and then dropped. So our next spot here for Fibonacci's is our former high. And we're looking at about 480 or so in this cluster here. And again, that doesn't have to hold price, but on a weekly time frame, you could just get a spike down there. So with structure, here we were looking for a 1, a larger 2, and a 5-wave move down, right? So not too dissimilar off of this, but these have overlapping waves. I was looking for something that doesn't have overlapping waves, but I was looking at the beginning of this. So in my opinion now, I think this might be a little bit different, and I think we can change this. And on the daily time frame, we can start looking at this. Let me get a little bit closer. And I think this could be, let me use these, an A for this mess up here, a B, and then a 1, 2, wave 3, wherever that might end, 4, and then 5. Okay, into some of those areas that we're looking for here. So we're looking for a 5-way structure out of this last part here. All right, and I think this is an ABC. Now this ABC, that doesn't mean that we make new highs. This, in my opinion, would open up a situation where this is the first part of our crash. So this is now my primary situation here, that we're in this larger primary wave A down, and then we'll look for a B. And the disturbing thing about after we get a bounce is that B waves can be anything. It can be a triangle, it can waste time, it can be a big flat pattern. So that's a scary part about that. It can be a zigzag, all right? It can be almost straight up. And then we're looking for a much bigger move to the downside. All right. But we will get a bounce, a playable bounce, but not yet. All right, now here is the chart that I want to show you that you're gonna think I'm off my rocker, but we did a Tesla update last week for members, for individual members, and it's only $4.99 a month if you're interested in that. But we did that. Tesla's holding up well. We're going to trade Tesla certainly in the near future. And so with Tesla being able, a possibility that could still go to brand new all-time highs. I know that sounds crazy. Some people are going to say, oh, the evaluation, this and that. But anyway, if that can, then here is a situation where the market overall can. And so this is an old chart that I dusted off and I retraced over the new one that we're using. This is something that I had on the screen. For those of you who have been following for a long time, I've had this on the screen for quite some time back here and up in this move. And I was looking for an expanded ending diagonal. So if this is all a 1, 2, and everything that just happened was a wave 3, and then we're getting a steep retracement into those zones that I was talking about. And you can kind of draw this at different angles. If I went bottom to bottom, it could go a little bit lower here. There's a couple different things. So we'll consider this a zone, but it seems to match up fairly well with this spot here. And I'll even just point out that this C wave, if you measure this from the AB and you get the 162% extension, and that fits that perfectly with this zone here as well. And so that's a common spot for the C wave to get to. That's at 470, we'll just call it 475 zone. And that would be our wave 4, deep wave 4. And typically in an ending diagonal or expanded ending diagonal, it's not a rule, but you would see crossovers from wave 1, from wave 4 over wave 1. So, by chance, if price did get down to 457, spike through or something, it doesn't break any of those rules, okay? And so that would be a wave 4, and then you get a new all-time high at wave 5. Now, again, craziness, but that we have this historic highs up above, and all that would look like is those back here. All it would look like, excuse me, I'll just go on the monthly time frame, would be something like this. We break down and we make a new high. We break down, make a new high. What if we just go sideways to work off all of the inflation? This has multiple bear markets within it. Okay, this was into 1960s, going into the 80s, and then contraction leads to expansion. All right, so I'm not really looking for the flat pattern necessarily anymore, but it doesn't matter. Let's let price show us. So right now we're looking for an A, B, C. And I don't know where that C will go. I'm just showing motions. But an ABC to start off our correction. So does that ABC lead us into a triangle? Possibly. Or does it lead us into something else? Is it time or price that really has the devastation? And here's an A, B, and then that C move was just relentless forever. All right, so a lot of different options. Is this you get your A, B, C into something like this, and then that leads us to a much more sideways situation, flat pattern. All right, lots of options there. So let's go down to the daily and on SPX and kind of end what we've started here. So on the daily time frame with SPX, the McClellan summation. So this gives you some color through this. And on the higher time frames, you know, again, I can reiterate, fine. I knew that a bear market was coming. You can look at my past videos over and over. I was shouting it, but I was trying to play a bounce, and that's where I made an error right here. Couldn't get over that trend line, and I thought the thing is though, when you're trading, and I'm not trying to make an excuse, if you're trading this, your stop should be underneath there anyway. So after we broke down from 55, your stop should be done. That was an ABC in my opinion. To go up higher, it did not. It crashed, so we missed this move. All right, I wasn't going to jump into a put heading into supports and things like that. Now I have to play it out. Okay, but the whole point of this is we're in bear territory. We already back tested there, thought we were going to go up again here, and we're continuing. And I'm telling you, this thing is not going to be done until it's extreme. Can we get down a little lower, maybe this trend line here, and then get a bounce up first? Sure, that scenario would play out just how we're talking about it. And then it really goes into extreme after time for your ABC. And so ultimately, you know, we could just see a larger A into those supports that I was talking about, a B, and then a C heading, you know, maybe all the way down to 3,500 at that point. Yes, we're looking for a bear market. All right. And that B wave, again, it could take time. Maybe that B wave wants us to waste time for different things to happen, and then we get the crash afterwards. All right, so that's your McClellan summation. And now for the options expected move for the week. It's a massive, massive options expected move. You just don't see these often. And so these I drawn. I actually didn't draw them in this week yet. I'll do that after the video. I forgot to. So I didn't draw them in here. But I will. We do have a video that I'm going to make for individual members. And that has all the options expected moves of the big tech companies and things like that. So you can see. So our lower end of the options expected move is, and I'll just do this here with you so you can see. We had the lower end last week. And this week, let me just, yeah, I didn't draw them in. Sorry, guys. Let me do that for you. Let me pause it and I'll do that for you. Okay, I got those in there. All I did was I already calculated them out. And so I just plugged them in here and made the new lines. So I'm not zoomed in very far because the options expected move here for this week is all the way down to 47.26. It can certainly move down to this far, but what I suspect is that we start to see some chop. We might not get down there. If we get straight down there, again, then I think we're going to bounce a little bit before heading lower. But at this point, I think it might not reach either end. And when that happens, you start to get to a point where you consolidate. And again, it could be a very quick consolidation or so. We'll see where Friday ends. Maybe it does bring us here. If we get the situation where I talked about earlier, a little bit of a bounce or something happening, chop through the week, and then we continue on Friday, maybe we make it down here, and then we have to suspect that next week we get just a little bit lower into those targets, all the way down to 4,600 that I was talking about. And then after that, we'll probably smack the upper end of the options expected move, or not. It just really depends on how big it is, because by the time you hit a bottom, you know, maybe the end there doesn't hit. Maybe we can look at a situation. Let's go back again, see if we can It's just really important to look back at history. I don't want to create a bias, like I forget what they call it, near-term bias or whatever. But look at this options expected move was lower. So this week started here for the Corona crash and got through the bottom of the options expected move and then closed here. And so the next week didn't get to the bottom of the options expected move, but did get to the top. And that's when you started trading higher. All right. And so didn't reach that massive volatility to the downside, but it did on the way down. Did. And then finally, when you had your reversal, it did not. So 2018, I wasn't tracking options expected move until after that. So I don't have any examples there. All right. So we're looking for, again, massive moves and volatility up and down. I do suspect the market's going to go a lot further, and it's not going to seem very far to the downside by how fast things are moving. But price-wise and percentage-wise, it's going to be moving really big. And I do suspect that we reach 449.50 maybe Monday, Tuesday, and then some sort of maybe chop action, volatile price action that I'm not going to trade. And then perhaps we make it, we'll have to see where the new lows takes us. But we have, again, those volume nodes anywhere from 4,800, but I'm really doubting that. I think more like 4,700 all the way into the volume node at 4,500. All right. So nobody knows. And when it does happen, it'll probably spike really fast intraday, and you'll see some sort of V reversal. But it's after that we don't know. Does it reverse like this and you never see anything happen, sideways consolidation? Or do we get big moves back and forth before heading higher, making higher lows, making market structure, and then heading higher? Okay, so we're looking for an A, a low into a B, and then that B can work out any way it wants to. And then we're going to look for a really big C over time. And again, I just suspect that we didn't really have a true kiss of death. So at that point, let's move to the weekly. At that point, it's so funny. I had this pointed down the whole time. At this point, here's the 20-week moving average. Is that B wave, when this is all said and done, we have that 200-week moving average that moves right into our area here. So it just seems like this is where price wants to go. Do we come back all the way up here over time, hit that kiss of death, and a deep, deep retracement? Do we go to new highs? We're going to talk about all that throughout the weeks. Or do we continue with this A, get some sort of B for the kiss of death, and then see you later? All right. That would be an ABC, in my opinion, that starts yourself off with just the first, on the big picture, just your first bear market. And then we go into a bull market, and then we have a larger bear market, or does it go sideways? Those are all the questions that we're going to have to continue to monitor as price action happens. I'm not going to be able to tell you this is exactly what's going to happen, but we're going to watch this. We're going to stick with our trend indicators and things like that. All right. Thanks for watching here. I know it was a long video. We'll see you in the daily video. We'll talk to you tomorrow. Don't forget to like and subscribe. Thank you so much.